Hello everybody, Christian from Treasure Town here, and today we're going to be reacting to a very interesting comment on one of my silver stacking videos that I wanted to explore further. This was commented by SHJ. You'll see why I'm not saying the full name. It's sort of a funny one, but anyways, they were discussing their 4 golden rules for precious metal investing or tangible asset investing, and I thought that it would be interesting to respond to them. Remember, this is not investment advice. This is purely for entertainment purposes, and I thought that I agreed with 3 of these 4 rules, but I want to hear what you think, and there's a lot of interesting reasoning and justification, or maybe refutation of what I'm saying, but hear me out and let's discuss. So the comment has been on the screen for a while at this point, but it says, accumulating any tangible asset, cash, precious metals, real estate, etc. is never a mistake provided the 4 golden rules are followed. Never go into debt to do it. Never concentrate more than 30 to 35% of your wealth into any single asset. Invest only when confidence is high that the asset will hold or gain in value, and never purchase any asset that you'll need to sell in 5 or less years. And I think, again, 3 of these 4 are ones that I agree with. I'd be curious. I'll go reason by reason and explain yay or nay in my thoughts behind it. So yeah, let me know what you think. But the first one, never go into debt to do it. I agree with this, certainly. And I think maybe real estate, there's an exception there. If you're buying a home, it probably would make sense to go into debt to purchase a home. Or if you're, somebody who knows how to do investing properly, I think using debt is super, super important and better than just using cash. But we're talking about precious metals here. Precious metals is certainly not something that I would recommend going into debt to do, because it's just, where does precious metals probably fit into most people's investment portfolio, or just how they think about it? It's more of a store of value. It's more of a hedge. It's more of something that, is a way that they're going to preserve wealth and possibly make more wealth in the future, but also just sort of have something that's a little bit outside of the average cash, stocks, bonds, investment vehicles and equity and, that sort of thing. I think that it would be very wrong also to buy silver or gold, because really with these things, you're just buying it and then hoping to sell that exact thing at a greater price in the future. And it's not spitting out cash. Like a stock is going to likely give dividends or future dividends or cash flows. Debt, very similar. Cash is probably preferred, whether you're getting interest on it or you can just immediately spend it. And then something like silver, though, on the other hand, is, if you're paying 5% a year to own silver, you probably have to hope that, and you're going into debt, it probably means you can't own it outright. So at some point, you might not have enough money to cover and own the underlying asset. So I think that very much agree. You should never go into debt. The next one is going to be never concentrate more than 30 to 35% of your wealth into any single asset. I generally agree with this as well. I think a lot of these rules I'm mostly addressing this in the silver or the gold stacking mindset. I don't think that this should be, and I think the number is probably lower than 30 to 35%, but people have their own, I'm curious what you would say your best allocation. I would think for somebody who really, really likes it, you should look at like 5 to 10%. For somebody who's a little more skeptical, I still think it makes sense to go like 1 or 2%. For example, crypto, I don't really believe in a ton. I've owned probably 0.2% for a long time, just because it's like, I think that's what is best to do. I purchased it around $12,000. I sold a fair amount of it when it was at like 35. I held it up to 60, did not sell it then, and hold it now where it's like 25,000. Anyways, what I'm saying is this should not be what all of your money is in. I don't think so. I think you should consider cash, equity in a home, stocks, bonds. Even if stocks are looking bad and they might go down again, some people are saying we're on the precipice, there's going to be a big collapse. I think you don't want to go 90% in silver and gold. It's just not a good idea. And I think I like the diversification. I think silver and gold often are the diversification as opposed to things that need to be diversified away from. Just something to think about there. So I agree with that golden rule. The next one, invest only when confidence is high that the asset will hold or gain in value. This one I disagree with. And I'm very interested to see which, what you guys think. Maybe that's fair. I think price matters. If silver was at $70, I would probably say and everything else is the same price, I'd say, well, it's a great gold silver ratio. Maybe you want to buy some gold. Maybe you want to take that and put it into stocks if stocks, correct a little bit. But I do think generally when you're considering stacking, often the price, if you're just looking to accumulate a 1 or 2% position, if silver is down 10% over the next 10 years, it probably won't have been a horrible idea to invest if that's 1 or 2% of your overall portfolio and you don't own any, because maybe that means stocks and equities and other investments have been really attractive. So I think that often it's better, just like I would say the same about stocks, like dollar cost averaging, to establish some type of a position might make sense in the context of silver, even if it's, if silver was, again, $70 an ounce and you own none, well, maybe there's a reason to, if you have $100,000 to invest, why not put $250 into silver and maybe $750 into gold? It's 1% of overall. If it goes to nothing, you still have $99,000. So that's where I would say it's probably not the best thing to do a play on in terms of specific price investing. Now, if the price is really low, it might make sense or it goes way up. You have to think about how you want to allocate towards it. But especially with its role as sort of a safe haven or a store of value, that sort of thing, not always the case. But the thing that then ties it all together really nicely is never purchase any asset that you'll need to sell in less than 5 years. Unless, if you're a hedge fund, you're going to have to do that. If you're a private equity firm, you're going to have to do that. But if you're going to just own silver for a store of value, there's enough cost, again, in terms of buying it. You're going to pay premium. Selling it, you're going to probably lose that premium. No guarantees on that. But there's going to be costs on either end of buying and selling it. So because of that, you probably want to have a significant differential in value. Or, if silver is the same price in 10 years, at least you'll have had the peace of mind that you own silver for that 10 years. And then if you need to reevaluate, makes a lot of sense. I don't think your plan should be to go buy $60 of silver and hope that silver goes up 3 times, get to 180, and then sell it, because there's probably going to be a lot of, it's unlikely that silver is going to be at 60, $70 tomorrow. And you then have to make a lot of effort to just make, $80. It probably would have been worth at that point just, working or something, or picking up an extra shift, something like that. I'm just giving my honest thoughts there. So that's how I think about, I really agree. Silver is not meant to be a short-term play. Gold is not meant to be a short-term play. When you're thinking of it from an investment perspective, it's not the type of very thinly, maybe then paper silver is better. If you want to buy silver that you're going to sell in 4 months, that's like when I like the physical aspect, but that's when I would recommend maybe buy some shares of silver instead. Just because of that additional liquidity. Like, silver is quite liquid in terms of you can get a reasonable value for it, but if you're betting on a 30% price jump in a short period of time, you could easily be paying a 10% premium and losing a 10% premium on either end of it. And all of a sudden, you pay $110 for $100 of silver, it goes to $130, then you pay $13 to sell it. You've made $7, even though the price went up 30%. The fees on that would be much smaller if you're doing it in a brokerage account or something. Anyways, thanks for watching. Let me know what you think of this video format, the comment response type of video, and just the thoughts on silver that I had, and I look forward to seeing you on some of my future videos. Comment down below and maybe make a highlight, or let me know if you want me to respond to your comment in a video. Sort of an interesting concept. Thanks for watching the video, and don't forget to like, comment, and subscribe. Also, be sure to visit our website, treasuretown.com, to stay up to date on everything going on the channel and possibly get some great deals on coins and collectibles. We look forward to seeing you on our future videos, and best wishes until then.